The market starts to pull back as expected. Can the bulls hang on? This is Invest with Jacob. Okay, guys, so in yesterday's video, we went over the big picture. We also zoomed in a little bit, and we were expecting a pullback toward the 4470 area, and the market started to pull back yesterday, hitting the 4500 area. Now the question is, can the bears follow through, or will the bulls hold on? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the start of the pullback, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. Yesterday, we went over the big picture video, so if you want to see that and understand exactly where we are from a bigger perspective, you can check that out. But today, we're zoomed in on the 1 hour, and our overall thesis was we have two basic things that we're looking for. One would be, is this an A wave or is it all of wave 4 off of the top here? So is this A, B, and then we get a C wave down into the 4250 area? Or is this all of wave 4 down to this A wave low where wave 4 would have ended, and this is the start of the impulsive move up? And the reason we are in between those two counts is because we do have a clear 3-wave move off of this low, which is not typically impulsive, although it can be counted as a leading diagonal. It is not the best count I could have for that. And then you would have a wave 2. Now, they did get up to the 1, 2, 3, 6, which you would expect for a wave 3 of 3, spiked above it just a little bit, and then they've started to pull back from there. Now, this move down is not what you would call an impulsive move. And what you would look for if this was going to be the bigger C wave down is an impulsive move down, okay, that breaks the pivot. So you get a 1, 2, 3, 4, 5 for a wave 1, then you get a wave 2, and so on down to 4250. The issue is this does not look impulsive off the high, and this is a 3-wave move off of the low. So you got kind of competing values here. So while this can be counted as a leading diagonal up, this could be considered a potential leading diagonal down if they play it out and fill out. The biggest key is going to be the pivot, and we've talked about this for a while now, and this is why pivots are so important. So the pivot is the 4469 area to the 4449 area. It's the 618 to 764 of the potential waves 1 and 2. For this to stay bullish and impulsive, it needs to hold that level on this wave 4 pullback. So you would have this be wave 3 of 3 up. This is wave 4 of 3 back into the pivot. That's how that works. If they're able to hold this pivot above 44.49, we would expect them to push higher towards 45.80, get one more pullback, and then push up into the 46.34 area to give us wave 1 of wave 5 of wave 3. So what does that mean? Well, this was a 3 of 3. If this move down is done, this would be 4 of 3, and we'd be working on this 5 of 3 up here towards 4,800. So in this case, this would be wave 1. Then you'd look for a pretty strong wave 2 pullback, and then waves 3, 4, and 5 up toward that 48, 4,900 area to complete that move for wave 5 of 3. So this would be wave 1 of wave 5 of wave 3, okay? So that's what we would be looking at. If they're able to hold the pivot, we would look for them to push higher towards 45.83. And then once they get to the 46.35 area, we go through all of this again, where the wave 2 pullback needs to hold support, and wave 3 needs to break out above the pivot. So that would be our first and primary count. Now, the primary means that has the highest probability of playing out. But given that we have some variables that don't match, for instance, this 3-wave move up and this kind of leading diagonal or non-impulsive move down, we do have some doubt in that count. So it's not like we're sitting here saying we are definitely going higher, and that's why we're kind of in between. But we did expect them to test the pivot, because what happens is either they're going to fail or they're going to come back and test the pivot and hold and move higher. And that's why the pivot is so important. So the alternate count then becomes contingent on the pivot, okay? If they can hold the pivot here, or if they can't hold the pivot, I should say, on the pullback, and they break down through the pivot, then we would expect a move down towards 4,200 for a wave C of a bigger wave 4. It would be closer to 4,250, the exact number in there. But then we would count this as an A wave down, a B wave up, and we'd be looking at C down, and then this 4 moves over to a bigger wave 4, which would be a little more consistent with what we're looking at on the big picture. I did talk about why yesterday. Again, if you want to check that out in yesterday's video, you can. But then we would look for a breakdown of 44.49, and if that happens, 42.50. At this point, 4,200 becomes extremely important for the bulls to hold should we get down into this area. However, this is our alternate count, and it does not come into play unless 44.49 breaks. So I will be looking for the market to pull back into this pivot area, and if we start to see a bounce, I can enter a long and set my stop at 44.49, and as long as we hold above that, the anticipated move would be towards 46.35. So you'd have 44.50 to 46.35, which would be about almost 200 points, about 185 points of upside with about 20 points of downside off of that. So very good entry, high risk reward, and high probability of playing out should we start to see a bounce out of this pivot, and very easy parameters for our stop. Over on the NASDAQ, okay, on the NASDAQ, more support for holding the pivot on the first time through, and that is even though the NASDAQ has a 3-wave move up for wave 1, 2, and then 3 of 3 to get above the 1.0, not quite to the 1, 2, 3, 6. We do have what I would consider a pretty clear A, B, C for A B wave bounce where the NASDAQ was actually a little bit positive today, and then you'd look for C down to test the lower end of the pivot in that 15,250 zone, 15,300 zone, right in there, and then you'd look for a move up out of there back toward that 16,000 area. So that would be what we'd look for on the NASDAQ as our primary count, same concept as the ES, only the NASDAQ is a little bit cleaner. And with this clear 3 waves off of the top, I would look for the NASDAQ to hold the pivot, that 15,250 area, and then push higher from there back over this high toward the 16,050 area, toward this top right here, before we see our next pullback. Hit that, pull back a little bit, and then 16,400 after that to complete its wave 3, or wave 5 of wave 3 to the upside. So NASDAQ very similar to the ES in the sense that we are looking to hold the pivot. In this case, it's 15,359, 15,241. It just has a cleaner structure off the top where you have a pretty clean 3 waves down, then a bounce in B, and now you'd be looking for that C wave down into the pivot. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, okay, that come with a 7-day free trial because I want you to get in there. I want you to make sure you love it and become part of my trading team before you ever spend a penny, and you can cancel at any time. We also have our Elliott Wave for Beginners course. As you can see from the testimonials on the screen, this is helping real traders make real money and finally understand the market instead of trying to decipher what the heck the news cycles are saying. When good news makes the market go down and bad news makes it go up, it's very confusing. Elliott Wave cleans that up, makes it simple, and I deliver it in simple, easy to understand videos. There are 25 of them in 3 sections. First is going to be the introduction, where we go through the expectations, your mindset and emotion, the KISS method, and why it works. The second would be your chart setup and tools. It's every tool you need to use along with Elliott Wave Theory and how to use that tool to understand what you're looking at and when the market is turning, and you can get confirmation using the extra tools. The Elliott Wave for Beginners is the third part, where we go through each wave, how it works, what its targets are, when it fails, how it fails, why it fails, all the different things you'd want to know about Elliott Wave Theory so that you can start looking at the market from a sensible standpoint and not from an emotional standpoint, which is what the news cycles do. The cool part is it does come with both of our monthly plans. So if you want to become a monthly member instead of paying for the course, it is included for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months. So we don't trade quite as often as the day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, You get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Okay, the key takeaways for today. We are basically looking for a pullback into the pivot zone, 44.69 to 44.49. If the bulls can hold and start to push higher, we would expect them to push up towards 45.83. However, if the bears do break that 44.49 area, we would look for a continuation pattern down towards the 42.50 area where the bulls must hold or the bullish pattern falls apart. Over on the NASDAQ, same type of setup. We came up into the 1.01236 area. Now we're pulling back. We would expect them to test the pivot, 15.241 to 15.359. As long as they hold the pivot, we would expect the next push up toward a double top around the 16,050 area. Then we'd look for another pullback from there. However, if they cannot hold the pivot, we would look for the 14,002 to 500 area and a bigger pullback C wave for a bigger wave 4. Guys, that is your market update for today. I will talk to you tomorrow.